Hello guys, welcome. This is Deepika from wealthandhealthmastery.com, and in today's video we are going to do a full stock analysis on Nvidia stock. We are going to take a look at the numbers. We'll see the revenues, we'll take a look at the gross profit, the PE ratio, the PS ratio, their debt to equity ratio, and based on that we are going to decide is this stock a good buying opportunity or not. Not only that, I'll also tell you the reasons to buy Nvidia and some of the reasons that you should sell Nvidia. We will cover all this in this video. So let's get started. Couple of things to note before we get started. The revenue should be increasing. Their profit should also be increasing. Those are the two good signs to include the company in your portfolio. The margins are decreasing. That's not a good sign. And their debt to equity ratio should be less, means their debt should be less compared to their equity. So that is another important thing. If the debt to equity ratio is high, that means they have a higher debt. That's not good for the balance sheet. So the debt to equity ratio should be less, and the PE ratio should be less as compared to the industry standards, and the PS ratio should also be less as compared to the industry standards. Okay, so we will take a look at all these numbers and then we will decide is this stock a good buying opportunity or not. So the first thing is I'm going to take a look at their revenues. So we'll go over to the total revenue in the past 12 months and it should be in the upward trend, and currently it is. You can see here the revenues are sitting at $80 billion, which is very good for this company, and it is in the rising mode. That means it's a good thing. So the revenues are increasing, and the other important thing is their expenses. Now let's take a look at their total expenses. Revenue is around $80 billion and expenses in the last 12 months is around $38 billion. So you're looking at almost $40 billion is available in the net cash here, because if you minus your expenses from the total revenue, is that the income that you have generated, and they have generated about $40 billion of income in the last year itself. So the revenues are increasing, expenses are also increasing, but they have a lot of cash in their hand right now. So that is a good news. The other important thing I'll take a look at is their gross profit. The gross profit should also increase, and you can see here currently they are sitting at $60 billion, and you can see here it is also an increasing rate in the upward trend, which is also a very good news for Nvidia. So based on all these factors, I feel like Nvidia is a great company to invest. Revenue is increasing, their profits are also increasing. Now let's take a look at their gross margin. Now is that increasing or decreasing? The gross margin is also increasing, which is very good. That also tells me this company is in a great position. Now we have decided based on the revenue, the sales, the profit, etc., that this is a good company to invest in. But is the stock currently cheap or higher, or should we make an entry at this point or not? We will decide that based on the PE ratio. The PE ratio should be less as compared to the industry standards. The PE ratio for the industry, you can see here, is at 73.93, and the PE ratio for Nvidia is at 59.84. That means it is below its industry standards, which is a good news. And the PE ratio should go down. So if I go over to here and we'll look at the PE ratio, the PE ratio should go down, and currently you can see here it is at 57.63, which is very good, and it came down from all the way up here was in July of 2023. It was around 152. So at that time the PE ratio was very high, more than the industry standards, but currently it is at 57.63. That tells me that currently it is high. I'm not saying 57 is a low number, it is high, but it is in the decreasing mode, and so this is a good time to make an entry into this stock and hold the stock for the next couple of years. Nvidia deals with graphic processing units which are used in AI. They're also going into robotics. They're doing a lot of things. So because of all these, Nvidia is a great company to invest in the future. Now PE ratio is less compared to the industry standard. Let's take a look at their PS ratios. PS ratio is the price to sales ratio, and this should also be decreasing because if your sales are increasing, your PS ratio would be less. And you can see here it was around 44.983 on July of 2023, and it came down to 32.36. It is currently low, which is fine. And if you look at the PS ratio for the industry, price to sale is at 17.49, whereas Nvidia is sitting at 31.96. It is higher than industry standard, but this is the only downside that I've seen so far with Nvidia, is their price to sales ratio is higher than the industry standards, but it is okay. Now, based on this analysis, I strongly believe that this stock is a great stock to buy. They have good cash flow, they have a lot of revenue, their gross profit is also increasing, their margins are also increasing. So based on all these numbers, I think Nvidia is a great investment for you. Another important thing is, what are the reasons to buy and sell Nvidia? What are the good things about Nvidia and what are the bad things about Nvidia? Let's take a look at that. So the first important thing is reasons to buy. Data centers present a solid growth opportunity for the company. As more and more businesses are shifting towards cloud, the need for data centers is increasing. So that is number one reason to buy the stock, is because of their data centers. To cater to this huge demand, data center operators like Amazon, Microsoft, and Alphabet are expanding their operations across the world, which is driving the demand for the GPUs. And one of the suppliers, the main suppliers of these GPUs, is Nvidia. And because the increase in the demand for data centers is going up, that's why the demand for GPUs are increasing, and that's why the sales for Nvidia is also increasing. The number one reason to buy Nvidia is because of the data center. Number two reason is Nvidia's GPUs are rapidly benefiting from the proliferation of AI. Because the demand of AI is increasing, so is the demand of the GPUs that are used in making these AI models. By applying its GPUs in the AI models, the company is expanding its base in the other untapped markets like automotive, healthcare, and manufacturing, which will support its earnings and revenue. These AI models will be used in automotive, healthcare, and manufacturing, and the demand for these is going to increase because the demand for AI model is on the rise. The other important reason is Nvidia's foray into the autonomous vehicles and other automobile electronic space is also positive. The company currently is on the firmer footing in the autonomous vehicle market, so they are also going towards the autonomous vehicles market, which is a good sign for Nvidia, and it is currently working with more than 320 automakers, Tier 1 suppliers, automotive research institutions. So this is a great company to invest in because they are also putting their foot in the autonomous vehicle industry as well. Nvidia is a cash-rich company with strong balance sheet and can be considered as a below average leverage company, as its total debt to total capital ratio is of 0.16, is significantly lower than the industry average of 0.30. Now, another important thing to invest in Nvidia is because of their debt to equity ratio, which is currently at 0.16, whereas the industry's debt to equity ratio is around 0.30. So it's a very good balance sheet that Nvidia holds, has a lot of cash flow in the hand. The other important thing is Nvidia boasts a steady cash flow generating ability. The company's accelerated revenue growth along with improving operating efficiency is bringing in higher cash flows. So all of these are good reasons to buy Nvidia stock. Number one is they're going towards autonomous vehicles, robotics industry. Their GPUs are used in the data centers and the demand for data centers has increased around the world. The demand for AI models have increased, which uses their GPU chips. So that is another reason that you should be investing in Nvidia, because in the coming years, these AI models will be available for in different industries. They will be available in the hospital industry, available in the manufacturing, in the autonomous industry. So everywhere these AI models will be used, and the demand for these AI models is increasing. So is the demand for the GPUs that is used in the AI models. Another important thing is their debt to equity ratio is less. That tells me that company is in a good shape, and their cash flow is also increasing, which is another good point for Nvidia. So these are the reasons to buy Nvidia. Now, what are some of the reasons that you can think that we need to sell Nvidia, or what are the shortcomings for Nvidia? The number one shortcoming is the United States and China's tit-for-tat trade war is a major threat to the company. This is because the United States is the largest semiconductor manufacturing country, with China being its biggest importer. So because there is trade war going on between US and China, that can be one of the reasons to sell Nvidia. The government is going to change, hopefully, or probably in November of 2024. That can affect these things in the positive direction or in the negative direction. We will see what will happen in the election in 2024, but currently, there is a trade war going on between US and China, which is also affecting Nvidia, or I will say which can affect Nvidia. The other important thing is Nvidia's near-term prospects might be hurt by softening IT spending. There's still high interest rates, and because of the inflation, companies are reducing their spending. And if the companies are reducing their spending, Nvidia's sales are going to go down because they are not going to spend on GPUs and all of that. So that can be another reason to sell Nvidia. And the third reason is competition between Nvidia and AMD. Previously, Nvidia and ATI made graphics chips for the PC market. Later, what happened is AMD acquired ATI and combined the CPU and parallel graphics chip into a single component. So because of the increasing competition from AMD can be another reason to sell Nvidia. Now, the fourth and the last reason is a substantial portion of the company's sales is derived from outside the United States. So if things outside the United States changes or the economic conditions around the world changes, that is going to affect Nvidia's sales also. Sales revenue to customers outside the United States accounted for more than 56% of the total revenues for the fiscal year 2024. And if there are any unfavorable currency fluctuations or any uncertainty in the economic conditions outside of United States will affect the company's growth. So these are some of the reasons to sell Nvidia. One of the reasons is the trade war between US and China. The second one is the increasing competition from AMD. The third one is their sales are coming from outside the United States. So if there is any fluctuations happen in the currency or their economic conditions changes, that is going to affect Nvidia as well. And the other one is the inflation. If the inflation is going to increase, the companies will take a break from spending, and if that happens, the sales or the revenues for Nvidia is going to get affected. Their top line is going to get affected if the companies are not spending the money on data centers and other things. So these are some of the reasons to sell Nvidia. I hope this video was crystal clear to you and you're able to decide whether you should be buying the Nvidia stock currently or not. If you have enjoyed the video, please like and subscribe to the channel so you don't miss any videos from the channel. I hope you enjoyed today's video. I'm going to see you tomorrow with another stock video, so stay tuned for that. Thank you very much and have a wonderful rest of the day.